In today's interest rate markets, let's take a look at the shorter end of the curve today in the two-year note futures as they're holding on to the gains throughout the week as we continue to see higher price action in most of the Treasury markets. And today we're seeing slightly higher price action. Early in the session, we did see the futures market trading up to a new high over the last 2.5 months, basically, before coming off a little bit and currently up just slightly on the day. And if it holds here, this would be a fourth consecutive day of higher price action. Currently priced at 102.09.5, so in the middle of the 102.09 level, as the markets are continuing to adjust to various themes in the market. And today, one of the primary driving factors appears to be consumer sentiment data that came in well below expectations, and so a weakening as far as consumer sentiment moving forward. And couple that with some of the other data points we've had throughout the week with inflation and some of the jobs data post the non-farm payroll last week, which was much stronger, but then weekly jobless claims did tick up this week. So you're continuing to see the markets expecting that rates are going to kind of hold, I guess, in these levels, even though the Fed has indicated they're not cutting anytime soon. Some of the data has created, I think, some buying pressure overall when you look at the Treasury markets throughout this week. And today we're looking at basically an unchanged yield in the two-year at 468.5, so right around that 468 basis point level. And when you look at the yield curve as a whole today, we are seeing it shifting slightly lower on the back end, a little bit more so. We're seeing a little bit more buying pressure on the back end of the curve again today. That's the fourth consecutive day of higher price action when you get to the fives and through the 30s. And currently we're looking at that 10-year yield down a couple of basis points now. So overall, buying pressure continues to maintain here, not as much as we did see earlier in the week. But as I mentioned, we continue to see most of the Treasury markets here and the futures markets moving up to the highest levels since early April.